Good morning, traders, and welcome to BCI's morning market outlook. First up, let's talk about the US dollar. The DXY remains below 99 after two days of strong rebounds. Rising energy prices linked to escalating Middle East tensions have increased inflation concerns and pushed market expectations for the next Fed rate cut from July to September. Although two cuts are still expected this year, safe haven demand has also supported the dollar as the US-Israel conflict enters its fifth day. The dollar has strengthened broadly this week, particularly against the euro and the Australian and New Zealand dollars. Technically, the trend remains bullish while the index holds above the 50-day moving average at 97.94 and the 200-day at 98.34. After breaking the previous swing high at 98.078, the next levels to watch are 99.68 and the psychological 100 mark. Support is seen near 98.5 and 98.38. Next up, let's have a look at WTI. Crude oil surged to 88.66 last week, the highest level since October 2023, driven by supply risks around the Strait of Hormuz. Escalating tensions in the Middle East have disrupted shipping routes, leaving tankers stranded and sharply increasing insurance costs. With roughly 20% of the global oil and LNG supply passing through the Strait, markets are increasingly pricing in potential supply disruptions. Technically, crude has formed a bullish breakout. Prices are trading above key short-term moving averages, with RSI in overbought territory near 88 and the MACD confirming upward momentum. The $80 level has become a key support zone. On the downside, on the upside, resistance is seen near $90 and 93.98, while a break higher could open the path towards $97 and potentially the psychological level of $100. Next up, let's talk about gold. Gold experienced sharp volatility last week, dropping 4 to 6% from its record high of 54.20 to a low near 49.97 before rebounding above 5100. Early in the conflict, safe haven demand supported gold, but a stronger US dollar and rising yields later have started weighing on prices, highlighting the mixed impact of geopolitical tensions. Technically, momentum indicators show a volatile market with an unclear short-term trend. RSI has cooled to neutral levels, while the MACD has formed a death cross, although the histogram is narrowing down. Key support sits near $5,000 and 49.97, while resistance levels are around 51.80 and 5200. A break higher could target 52.65 and 53.16. Lastly, let's have a look at the Australian dollar, which has shown relative strength due to expectations that the RBA may raise interest rates again. The currency is heading for its first weekly decline since mid-January as global risk sentiment deteriorates amid escalating Middle East tensions. The Australian dollar traded sideways last week, initially testing 69.44 before rebounding and stabilizing above the 70-cent level. The pair is currently trading within a range between the 40-day moving average at 69.69 and last week's high at 71.22. The resistance sits near 70.74, followed by 71 cents and 71.22, while support is seen around the 70-cent mark and 69.69. A break above 71.22 could open the door towards 71.57. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.